Hey everyone, Target reported second quarter earnings, which I'm going to review in this video here. I'm also going to update my recommendation for Target stock. Coming into this report, I had Target stock rated as one of my top stocks to buy right now. So you're going to want to tune in to see if I am updating that recommendation. But first, let's begin with the earnings review. Target saw its total revenue decrease by 4.9% in the second quarter to 24.8 billion. Earnings per share, however, more than tripled to $1.80, up from 39 cents in the same quarter the previous year. Remember, in this quarter the previous year is when Target started to offer incentives and promotions, when it noticed that customer demand for its products was falling and it needed to slash prices to get rid of inventory. Also, in this second quarter last year was the height of the inflation problem for Target when it was experiencing inflationary pressure from all angles, including shipping, wages, items, all around. And so it was the peak season for the bad news for Target stock, and that's when it really experienced a decline in terms of valuation. So ever since then, Target's been working to fix the problem, and one of the main problems has been too much of the wrong kind of inventory. The kind of inventory that was popular during the pandemic when we were staying at home is not popular right now, right? People are not interested in pajamas and board games as much as they were during the earlier stages of the pandemic. Also, flat screen TVs, gaming consoles, things of that nature are not in as high of demand. And so Target had a lot of that kind of inventory. So it's had to offer incentives, promotions to work through that inventory, and so far it's doing a reasonable job of that. Inventories in the quarter decreased to 12.7 billion. This was down from 15.3 billion in the same quarter last year. Also, within this inventory is a better mix now, as management said that it sold off a lot of the unwanted or undesirable inventory, and it replaced a lot of it with investments in the inventory that's in demand right now. Things like high frequency items. You could think of things like you would use and go through very quickly, like makeup, toothpaste, things of that nature, groceries. That's what people are shopping more for right now. And so Target has invested in that kind of inventory. So if it wasn't those investments in the new inventory, inventories would have been even lower for Target. So not only is inventory down by 2.6 billion year over year, but the mix of inventory is in much better shape for Target right now. Here's the thing that I've been excited about for Target stock, and it's the same day services. And this is one of the reasons why I've recommended Target as one of my top stocks to buy, is because of how successful Target has been in these capital investments in same day services. These are things like buy online and pick up in store, buy online and pick up at the Target parking lot where an employee will bring the item to your car, and buy online and have the item delivered to you in the same day within a couple of hours. These have been very popular and they have exploded ever since the onset of the pandemic. And even as economies have reopened, these sales in these categories have still increased, although not increased as much. But that's understandable because it experienced a huge boost during the pandemic and now is incrementally moving higher. It's impressive that it didn't come back down in itself. So same day services in the most recent quarter grew by 4%, led by a nearly 7% increase in drive up. That's been the most popular, and you can understand why. From a consumer standpoint, it's the most convenient. You could buy something online and then drive up to a Target parking lot, and the employee will bring it to your car. You never have to leave your car. You can open your trunk, they'll load it in your trunk, and you can be on your way. That saves you a lot of time as a consumer, and it allows you to get your items sooner than if you were to buy it in even Amazon, which can deliver items next day. Amazon can't do it as quickly as Target has been able to do it with these drive up services. So that's, in my opinion, going to be a competitive advantage for Target for several years, because as fast as Amazon is, it's going to be very difficult for Amazon to get you your items faster than you can do it with Target, where you could buy online and go pick it up in the parking lot. So because of the revenue falling in the second quarter, Target lowered its yearly revenue and profit forecast because sales are down more than Target expected sales to be down. And that's a bit of bad news for Target investors, that the company is lowering the forecast. It was already not expecting a great year to begin with, and now it's bringing down those expectations further. So overall, to update my recommendation on Target stock, I'm keeping it rated as one of my top stocks to buy. Coming into this year, I knew this was going to be a challenging year for Target. I knew the challenges it faced with the elevated inventory and the changing consumer demand, but also its valuation was reflected through those challenges. It was already incorporating those challenges into its valuation. Target stock is not expensive at a forward price to earnings of around 13 as of this recording. So I'm confident that Target can work through these challenges through the rest of the year. And longer term, the rollout of these same day services continue to pay dividends, and I think this will give Target a competitive advantage against other retailers, and protect its business from Amazon and other e-commerce retailers, because it gives consumers more convenience, faster, and something that will be very challenging for Amazon to match. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.